Hi everyone, welcome to another episode. I know it's the first time I'm recording with you guys, but it's fine. I don't have my access to Blackboard, so hence I'm recording this video for you guys. So the chapter that we are doing is chapter 5, petty cash. This is a straightforward topic, so I don't think you will have any hiccups understanding this topic. So without waste of time, let's get to it. So today's discussion, what we want to achieve after this learning outcome is to ensure that you guys understand the use of petty cash. You are able to complete a petty cash voucher, and you are also able to balance the petty cash book. So petty cash serves as a ready source of cash to pay for minor expenses incurred during everyday business operations, for example, milk, coffee, stamps, delivery of parcels. So here's what we have. Petty cash, we use it in the business to buy small items or minor items that do not need us to go to a bank and withdraw a large sum of money. So we will have as maybe a safe in the premises of the business where we keep this money of petty cash. So in order to understand how to manage petty cash in the office, you need to understand the following concepts. Now, the first concept that we have is cash flow. We say that it is the amount of money that is kept within the petty cash fund. It is set amount of that is maintained and topped up to this set amount regularly. So for example, petty cash for other businesses it's less than 1,000. So every month it will have to be 1,000. So the 1,000 will be in the safe. Maybe when you use, let's say you use 500 from the 1,000, you need to replace that 5,000 back. So this is what we mean when we say that that money must be topped up at regular intervals. So we say the cash float is also called the impressed amount. Now let's look at the example. We say that ABC Traders is a company that wishes to maintain a cash float of, sorry guys, let me go back. I want to check if I'm on track. Yes. We say that ABC Traders is a company that wishes to maintain a cash float of 400 in their petty cash box. However, due to expenses incurred, the money in the petty cash box has decreased. Their expenses amounted to 150, which means that they only have 250 left in the petty cash box. The 400 rand was the opening balance, and from that 400 rand they've used 150. So what is remaining is 250. So as the amount in the petty cash box decreases, the person in charge of the petty cash will draw money and top it up to 400, which is your impressed amount. The amount of money that was drawn must be equal to the petty cash payments that were made. So what we mean is that we know that every month we're supposed to have 400 rand as our petty cash. So if we use 150 from petty cash, we are going to be left with 250. So the person responsible for petty cash will now have to replace or take money from the bank account and replace it in the petty cash box. So we are going to have to withdraw 150 from the bank to replace the 150 that we used so that we can have the 400 rand as our petty cash. So the other concept that you must know is the petty cash voucher. Well, a petty cash voucher is a source document and is a proof of what the money from the fund was used for and by whom it was used. This source document must be completed with every transaction. Now, the source document for completing a petty cash is petty cash voucher. Every transaction that is being made from a petty cash, it must be recorded on the petty cash voucher, because through petty cash voucher we are able to track all the transactions that were made and whom and who made those transactions, as well as for reasons why those transactions were made. So we say that when completing a petty cash voucher, the following information must be specified: reason for the payment, amount paid, name and signature of the person receiving the cash, issue date of the document, voucher number, and the cost center which must be allocated. Now here we look at the example of petty cash voucher. As you can see, the petty cash voucher indicates the date when this transaction was made. We also have petty cash voucher number. We also have the details of that transaction. So this petty cash voucher, it was made for purchasing postage stamps, as you can see, and we can see the amount that we used to purchase those postage stamps. At the end, we have a person who's authorizing this petty cash transaction, as well as the surname. So these are all the details that needs to be on the petty cash voucher as your source document, so that the person who comes and audit, it can be easy for them to audit this information. The other concept is receipts into petty cash. We say that as money goes out of the petty cash fund in the form of payment, money can also be received into it. Firstly, money can be received in order to replenish petty cash fund. Like I was saying, if you have 400 and you use 150, at month end you must replace that 150 so that you top it up again to 400 rand. We say that a check can be drawn from the business account to be used to impress the amount that was used. Secondly, money can also be received from staff members when they make personal use of the business equipment and facilities. The person responsible for the payment into the petty cash fund issues a cash receipt stating amount paid, whom it is received from, and for what purpose. The person responsible for the petty cash must complete and sign a receipt and copy the document, which will serve as a proof of payment. Now here we also look at the recording of petty cash transactions. We say that all transactions regarding the petty cash must be entered into the petty cash book. So no transaction must be left untainted, all unattended. All transactions within the petty cash must be recorded. So if you use amount from petty cash, you must make sure that you record this amount on petty cash voucher, because the petty cash voucher serves as a proof of what you were purchasing, and it also shows the person who was responsible for authorizing that money be taken from petty cash. So we also say that the petty cash consists of two sides, the debit side and the credit side. Now the debit side, which is on the left side, contains information such as cash received into the petty cash box, whereas the credit side records all transactions pertaining to payments that were made from the petty cash. Now petty cash falls under asset, so if you know that asset increases on the debit side and decreases on the credit side, hence we are reflecting our payments on our receipts on the left side, which is the debit side, and payments on the right side, which is the credit side. Now here let's look at this question. We say that the petty cashier at TK Traders starts a petty cash book on 1st February 2011 with a cash float of 50 Rand. During the month of February, the following transactions took place. Now, before we start with this transaction, you can notice that our petty cash for the month, it's 50 Rand. Meaning that if we use that 50 Rand, if we are going to use 5 Rand of 50 Rand at month end, we must make sure that we top it up by retaining that 5 Rand. So these are the transactions that took place in the month of February. So on the first day we bought stamps and we issued the voucher number 1 for 12 Rand. On the 10th, we bought casual labor, and we issued out a petty cash voucher number 2 for 7 rand. On the 12th, we bought coffee from cafe, voucher number 3 for 9 rand. On the 15th, we made some repairs and we issued a petty cash voucher number 4 for 8 rand. Then on February the 20th, we bought some paper and we issued a petty cash voucher number 5. So the voucher number, these are the source document. We had the source document number 1, number 2, number 3, number 4 until number 5. So we bought paper for 11 rand. So what you need to do, you need to say 12 plus 7 plus 9 plus 8 plus 11. So you will sum this up, and the total here it's going to give you 47 rand, meaning that for the month of February we spent 47 rand from petty cash buying these items. So remember, our policy is that we must keep our petty cash at 50 rand. So we need to top up our petty cash by 47 rand, meaning that the only money that was left at the end of February was 3 rand. When we start the month of March, we need to replace, or we need to top up our petty cash by 47 rand to make it 50 rand. So that's all what it means by this. So let's look at the solutions if you're going to record this. So this is the solutions. It's very simple, guys. Don't be confused by this table. Don't be confused by this table. If you can check, when we started with 50 rand. Like I was saying, we bought all these items for 47 rand. If you say 50 minus 47, you're left with 3 rand. So at the end of the day, to top it up again, we need 47 rand, because that's what we spent. 47 rand plus 3 rand gives us 50 rand for the next month of March. So that's all you need to do for petty cash. So without any waste of time, I hope you guys understand how petty cash works. It's a very simple concept. It just need you guys to know how it works. So I hope you enjoyed this video. Please like and comment. At least tell me if you really enjoyed the video, or if I need to improve on some of the elements. Thanks for watching.